Hello everybody, my name is Niku and welcome to the Trading Setup channel. Truth is, it all comes down to details. There are tools out there that not only let you look at a chart, but truly understand what's happening. These are indicators that when combined, form a system. When they start working together, that clarity appears. Entry points become sharp and decisions confident. Today, I'm going to talk about those tools. And let me say, this is not the kind of stuff you're going to find in the first search result. These are the very elements that practicing traders use, and in the right combination, this can build you a system that will last you for a long time. By the way, before we dive into the details, I've created a resource where I've collected the essence of my experience. There you'll find setups with real examples, reviews of past cases, and pinned materials on the secrets of indicator settings. More importantly, I've left a detailed risk management manual to help protect your deposit in unusual cases. All of this is completely free, but keep in mind, I update the material regularly and the old ones disappear. So I suggest you follow the link in the description and grab it while it's there. Now, let's have a look at those tools. The first of these tools are momentum indicators. These measure the speed and strength of price movements, helping identify oversold and overbought conditions, so they are great for spotting potential reversals. But not only that, they are also great for continuation entries. Examples of this is the RSI, the MACD, and the stochastic oscillator. You can think of them as showing you how fast a car decelerates or accelerates. The second of these tools are trend indicators. They help you identify the strength and direction of the current market trend. They take smooth price data to show you whether the market is moving up, down, or sideways. Examples of these are the moving averages, like the simple moving average or the exponential moving average, the ADX, and the parabolic stop and release. You can think of them as the compass showing you where the market is heading. The third set of tools are volatility indicators. These measure the rate of price change and market uncertainty. The higher the volatility, the bigger the price swings. Examples of these are the Bollinger Bands, the average true range or ATR indicator, and the VIX. Think of them as showing you how bumpy the ride is. Full set of tools are volume indicators. These analyze trading volume to confirm price movements and trend. Strong moves with high volume is generally more reliable than moves with low volume. Examples of this is the on-balance volume or the OBV, or the volume weighted average price or the VWAP. They show you whether there's real buying or selling power behind a move. The fifth set of tools are support and resistance indicators. These help identify key levels where buying or selling pressure might emerge. Examples of these are the Fibonacci lines and pivot points. They help identify areas where the market could potentially turn around. And one more thing. If you want not just to know the names of these indicators, but learn how to apply them effectively to your system, I have a private trading community. There, we run live sessions, trade in real time, and share daily setups and strategies. Entry is limited. I personally select people to keep the atmosphere of a working environment. So if you're interested, message me. I've left the contact in the description below this video. And make sure to subscribe to this channel. There's a lot more breakdowns and useful material coming to help build your strategy step by step. I'll see you guys in the next video, and until then, may the pips be with you.